Today's episode is brought to you by Mazars.
SoundCartel.
If you're lucky enough to be in a certain category of wealthy or privately owned businesses, don't spoil your good fortune by being, well, a little slack on the tax governance side of things. From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. The ATO has embarked on a new program aimed at encouraging everyone to sharpen up the way they do their tax. It's called the Next 5,000, a tax performance program that's part of a bigger initiative that's already been reviewing the top end of town. Jamie Towers is a tax partner at Mazars, and he's telling Heather Dawson what's going on with this Next 5,000 program.
The aim of the program is to create a justified trust that the high wealth private group is paying the right amount of tax. And the approach is based on engaging directly with the key individuals of those groups to get an understanding of the group, all of the entities in their group, and the key decision makers' approach to tax and tax risk. And it's aimed at being a preventative measure rather than a corrective approach. So the tax office is encouraging an open dialogue with the taxpayers and seeking to provide certainty on the tax position on transactions through early engagement and pre-lodgement agreements. So it's designed to provide certainty to the taxpayers and then also designed to provide trust to the general public that all these large wealthy individuals and groups are paying the right amount of tax.
Well, Jamie, who falls within the definition of privately owned and wealthy, in this case of the Next 5,000?
So the tax office, through their data analytics, have classified private wealthy groups into three categories. They've got the top 500, which they've already reviewed. They're now into the next 5,000, which is the next 5,000 groups beneath the top 500. And then they've got the medium and emerging private groups. So the next 5,000 is aimed at individuals and their groups which control wealth of more than $50 million.
Now, we understand that formal tax governance is one area that the ATO will focus on as part of the programme. So why is this of interest?
The tax governance is really a framework to identify, assess and manage tax risk. Now, we're taking it down to the private group level. The ATO is seeking to understand how the private group approaches tax risk. They'll give the group a rating, either green, amber or red, and then whatever that rating is, that will influence the group's tax profile in the eyes of the tax office and will dictate how the tax office engages with them going forward, whether they'll give them the all clear or whether they'll seek further reviews.
Well, you mentioned the tax governance framework there, Jamie. Can you clarify a bit more about what's involved there with the framework?
Sure. So for private groups, what the tax office is looking at, they're really keen to understand the taxpayer's approach to tax. And it covers areas such as, well, who are the key decision makers about tax within the group? So who controls the ultimate decision on how much tax is paid on particular transactions? They look at what controls are in place within the group's reporting systems to recognise and mitigate tax risk. They're looking at whether advice is sought from professional advisors in relation to particular transactions. They're looking at the reporting system, whether they've got adequately trained people using appropriate systems to capture data. They're looking at whether the taxpayer has an open and professional relationship with the tax office, and often this Next 5,000 program is the start of that open relationship. They're looking at the timeliness of lodgements and obligations, and they're trying to assess whether they feel that the taxpayer overall demonstrates ethical and responsible behaviour. Now, as part of a framework, they're looking, it depends on the size of the taxpayer, but their ideal situation is actually having a formal policy document or manual that informs the relevant decision makers in all areas of the business or organisation about tax risk and how to approach it. But one of the key things is that the tax office wants this to be a live working document. They don't want a manual that's put in the bottom drawer and forgotten about. They want taxpayers engaged on an ongoing basis to ensure the right amount of tax is paid.
And what would be the benefits of complying with that framework?
Well, the benefits are that, for the taxpayer, that they get a green rating from the tax office, and that should mean that the tax office will sign off on the tax affairs of that group for a couple of years, and that gives them confidence that they won't have a review in the future. And then for the general public, it's supposed to provide confidence that the ATO are doing the right thing to ensure that these high wealth people are paying the correct amount of tax.
Now, Jamie, justified trust is a word that's come up with all this, and the ATO, I understand, would like to establish justified trust, that each entity has paid the right amount of tax. So what do they mean by justified trust, and what areas of the business will they review to make sure that it's been established?
Yeah, so the tax office have borrowed the idea of justified trust from the OECD. So the OECD has been really cracking down on tax avoidance internationally over the last quite a long time. And so the OECD came up with this concept of justified trust. So it's aiming to provide the community with assurance that a taxpayer is paying the right amount of tax. As long as they can be justified, that's fine, but the tax office wants to know why there may be a difference between accounting profit and taxable income. And the justified trust is really attained through these risk reviews to allow the ATO to get a good understanding about the taxpayer and hopefully promoting that they are a good corporate citizen. And it's by having a high involvement early on, getting in front of the taxpayer before they lodge their income tax returns to hopefully generate the correct tax outcome to give certainty to the taxpayer and the general public.
I understand there's a particular focus, Jamie, on the extraction of wealth for personal consumption. Can you elaborate on that?
Yes, certainly. And one area has been, are we paying the right amount of tax at the business level? Then the next area is, well, what happens when the taxpayer wants to spend it? So the individual's made $1 million in the company, he now wants to spend it and buy a boat. How does he do that? And does he pay the right amount of tax in doing so? So taking money out of a business, you could do it via a dividend or a trust distribution or a loan or a number of different ways. So what the tax office is really seeking to review here is, one, that the individual is paying the right amount of tax when they take the money out of the business entity, and two, they're not getting into any schemes to inadvertently delay tax or pay it at a lower rate than they should be. So they've been examining company loans, they've been examining trust distributions to understand how they've been extracting the money and making sure that they are paying tax at the correct level.
Okay, well, final question then. Jamie, what are your key recommendations to clients in the light of this next 5,000 tax performance programme?
Yeah, it's an interesting question, and there's really no one-size-fits-all approach to tax governance and this next 5,000 program. So, for example, I've had one client that's gone through the program, and while they had more than $50 million of wealth, they were really just a passive investor. So they had very little risks. So in that case, the ATO doesn't expect a big tax manual approach to tax risk. But on the other end, you might have a very active business or many different active businesses controlled by a particular family. And in that situation, the tax office does, or their ideal is that they do have that tax compliance manual with tax risks mitigated. They want to understand there is a framework to pay that right amount of tax. We talked early on about the 3 different types of groups. You've got the top 500, the next 5,000, and then the next layer is the emerging wealthy. And these programs have been pushed down to lower levels of taxpayers. So if you haven't already been notified of a Next 5000 review or any of these types of reviews, I would recommend speaking with your advisor, your accountant or lawyer about your approach to tax risk. And at Mazars, we can help with things like a tax health check or a tax governance review for all different levels of taxpayers to ascertain where the risks lie in that business or in that family group. We can help to formalise a tax governance framework that's appropriate for that size of the taxpayer. As I said, it's not one size fits all. You need to take appropriate measures. And the ATO understands that and appreciates that you've only got so much money to spend on tax governance, and they just want to make sure that you are comfortable in paying the right amount of tax.
That was Mazars tax partner, Jamie Towers. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.